All right, guys, in this video, we are going to just talk about the different filing statuses, standard deductions, and how the tax brackets work and walk through an example, okay? So there are a number of different filing statuses here. I'm just in the Financial Calculations Worksheet. So this is a tab here. It's the 2022 tax brackets and numbers. Every year it changes a little bit. So I'll go in here and update it every year as I can. But if you've already downloaded this, it's not going to change, right? So you just have to, this is to give you an idea. And you just have to make sure that, hey, 2023 tax brackets are going to be slightly different and so forth. Okay, so you just have to understand that. But here are the general filing statuses. Number one, filing single. Pretty straightforward. You're just single. Okay, no dependents, not married. You're just a single person filing for yourself. Now, I'm not going to talk about if you are a dependent, like if your parents still claim you as a dependent on their taxes. I'm not going to go into that. So I'm talking to people, you're your own person, you're filing your own taxes, and you're single, that's that one. Married filing jointly is obviously straightforward. It's if you are married and you are filing together with your spouse jointly. So your income and your spouse's income all goes on there. The tax bill is joint, etc. Okay. This also works if you have dependents. So if you have children or anybody else that is relying on you financially and can qualify as a dependent, they would also be included in that tax filing status. So I'm married, I have 3 kids. We file married filing jointly. Married filing separately, there are some instances that can make sense where you're married, but you actually want to file separately. I'm not going to go into the details, but essentially you file just on your own, right? One spouse would file married filing separately, just with their own numbers. The spouse would do the same. And then dependents, just works out. Like if there's children, you decide who's claiming them on whose return and that type of thing, okay? So it's the reasons why I'm not going to go into. It can be complicated, but if you're wondering about it, then just work with a tax professional. And then head of household. So this is if you are single, right? You're not married. So you could be divorced or maybe a widow or widower. You're single, but you do have dependents. So if you're divorced, but you have kids that you're claiming as dependents on your return, then you would file head of household. Okay. That would be probably the most favorable status to file under. Okay. So as we talked about the adjusted gross income, right? So we have the gross income minus deductions gets your adjusted gross income, your AGI, minus the itemized or standard deduction. And then that gets you to your taxable income. And that's how taxes are calculated. The standard deduction amounts for these different filing statuses are as follows. Single, $12,950. Married filing jointly, $25,900. Married filing separately, $12,950. Head of household, $19,400. So you take your AGI and subtract the standard deduction, and that gets you to your taxable income, okay? Now, I will talk about itemized deductions in a future video, but these are set. These are standard. Everybody in those filing statuses can get this. There are some increases. So if you're, for example, if you're over a certain age or if you're legally blind and things like that, they actually add a little bit to your standard deduction. So if that was your case, you would probably know it. But for everybody else, these are the numbers. Now, we're going to look at tax brackets here because, as I discussed before, the U.S. income tax system is not a flat tax. It is progressive, which means the more you earn, the more you pay. The more you earn, the more you pay, depending on the bracket. So they've divided it out into all of these. So on here, on this tab of the Financial Calculations Worksheet, I've got single filers, the bracket, married filing jointly, married filing separately, and head of household. So you just find your applicable filing status, and that is the bracket that you would use. As you notice here, they all have the same divisions, okay? So it's 10%, then 12, 22, 24, 32, 35, 37. They are all the same there, okay? Now, these brackets change from time to time. The Tax Cuts and Jobs Act of 2017, when President Trump was in office, that changed things actually quite a bit, okay? But those tax changes are set to expire at the end of 2025, and they'll revert back to what they were in 2017. It was a temporary kind of tax change unless legislation is enacted that changes that. So they could vote, Congress could vote to continue the changes. They've already been talking about a ton of other different proposals to make modifications to the tax code and things like that. So it could always change, but as of now, this is what it is all the way up through the end of 2025 when it kind of reverts back to 2017 brackets and deduction amounts and things like that. Okay. So let's just look through this. We're going to start with a single filer. Okay, so I want to walk through how this works, the progressive system. So you basically divide up your income into the different brackets, and only your income in that bracket is taxed at that rate. Okay, so, and I'll walk through an example of this in a second, but anything between of taxable income between this amount is taxed at 10%. If you earn more than this, then this portion up to $10,275 for single filers is still only taxed at 10%. Only the dollars above this, so between $10,276 from there to $41,775, those dollars are actually taxed at 12%. Any dollars between these two ranges are taxed at 22, and so forth, okay? So it's not cumulative. It's not a 10% tax on this money up to $10,275. And then if you get up to this, it's not a 12% flat tax on everything up to here, from 0 to here. It's only the numbers within this bracket. So the tax owed is over here. This can kind of help you. So if you, for example, this is the difference between marginal rates and effective tax rates. Your marginal tax bracket, your marginal tax rate is where your last dollar of income is taxed at. So if your taxable income is $100,000, you fit into the 24% bracket. That is your marginal tax rate, 24%. Okay, you're not paying 24% on all of that $100,000. That's just the highest bracket that you get to. That's the marginal rate. But to calculate your effective tax rate and actual tax owed is a little bit different, right? You have to calculate it based on each bracket. So you can see here in this little column that it shows how much you actually owe. So anything in this range, you pay times it by 10%, and that's how much you owe. If you're in the 12% marginal bracket, then what you do, you know that you've already reached this, and it's 10% of $10,275. So your total tax up to that point is $1,027.50. And then you add on 12% of any amount over $10,275. Okay, and that would be your total tax owed. If you're up in this bracket, then all of these brackets put together so far up to this point, you owe $15,213.50 plus 24% of any amount over this. Okay, does that make sense? So it's graduated. It segregates different portions of your income and tax them at different rates. Okay, so let's walk through this example. Let's say you have $100,000 of taxable income. So this is adjusted gross income minus your deduction, and you're at $100,000 of taxable income, right? So what would happen is your marginal tax bracket is 24%. That's your marginal tax rate. So up to this point, you have paid $15,213.50. So we're going to add that here. $15,213.50. That's the tax you've owed that you owe so far. Then we're going to go $100,000 minus $89,076. That ends up being $10,924, right? We're just trying to find out how much of that income is in the 24% bracket. It turns out that $10,924 are in that 24% bracket. So we take that times by 24% is $2,621.76. So we're going to add this up. Total tax up to that point was $15,213.50. We're going to add that to this number that we got for being partially in the 24% marginal bracket. We're going to add them together, and the total tax owed is $17,835.26. So to find out our effective tax rate, we take the total tax owed divided by our taxable income, and that's how much we actually paid. Okay, so $100,000, or so $17,835.26 divided by 100,000, 17.84%. Okay, this is our effective income tax rate. So even though our marginal rate is 24%, our effective rate is 17.84. I hope that example is helpful in kind of clarifying all of these pieces. Taxable income, deductions, right? All the deductions to get you to your taxable income and how that's calculated on each bracket. So you can go calculate this manually and find out how much you owe. You can do a projection and say, okay, well, I'm probably going to earn this much. All right. That'll be my, unless any deductions or whatever, if you have, right, that we talked about earlier. You're like, oh yeah, after that, I probably have $100,000 of AGI. I'm going to take out the standard deduction. So I have this much of taxable income. Look at here, and you can actually calculate to the dollar what you're going to owe before any credits and things like that. So you can do the same thing, married filing jointly, obviously. What you notice here is these are just expanded. So single filers, if you earn $75,000, you're in the 22% bracket. Well, if you earn $75,000 married filing jointly, you're still only in the 12% bracket. So they're favorable rates if you're married filing jointly. Okay. And so you don't even get to the 24% bracket till you're earning $178,000 of income. Whereas if you're single, you're in the 24% bracket once you're earning $89,000. Okay. So they just go a lot quicker when you file single. So that is one benefit to being married filing jointly. They're essentially doubling the amount, which makes sense because if you have two people and double the income, and you're filing together, then it makes sense. Okay. And same for married filing separately. That just comes basically right back down to individual rates almost. And then head of household is a little bit preferable. All right. So that wraps up this portion talking about and going through the example. We'll see you guys in the next video.
The more you learn, the freer you become.